Hi everyone, I'm a tax pro and today is day 4 of 90 days to taxes. Today we are going to talk about business banking. So a lot of questions I receive are, do you need a separate bank account for your business? And the answer is it depends. So in certain circumstances, yes, you absolutely have to have a separate bank account. You cannot run your business through a personal account. Though those instances are businesses that are taxed as partnerships, S corporations, and C corporations. You absolutely have to have separate bank accounts for those businesses. Okay. Sole proprietorships from a tax perspective are considered a disregarded entity. What that means is that that entity is not necessarily considered separate from you as the owner from a tax perspective. So sole proprietorships sit on Schedule F, Schedule C, and some on Schedule E of your personal tax return. Because of that, from a tax perspective, you don't necessarily have to have a separate business bank account, but that doesn't mean that's not best practice, right? So as far as best practice goes, it is best practice to have your own bank account. The reason being is it creates a very clear audit trail on what is business, what is personal. If you run everything for your business through the business accounts and everything for your personal through your personal accounts, if you get audited, it's going to really help that process. Everything that is business related will run through your business account. It just makes things so much simpler. So then I get the questions of, well, I'd like to have a credit card in my business, but I can't open a credit card under my business name. Maybe your business has no credit. If you can, go ahead and get a credit card. You may be able to personally guarantee it, but then keep it under your business name. So then the credit card company can use your personal credit, but it can be listed as a business credit card. That's the best practice there. I understand that sometimes a business may not have credit and a business cannot, purchase some vehicles or purchase a building or purchase machinery or equipment. There may be instances where you need to personally sign for those. From a tax perspective, it's okay if you personally sign for those. All the paperwork should still be under the business name. There are potentially tax implications if you purchase something under your personal name and then you're utilizing it in like a partnership or an S corporation or a C corporation as a business asset. But I understand that there's instances in which you just don't have the credit in the business in order to purchase those items that are needed. Best advice would be to go ahead and get a small business credit card when possible and start building credit in that business wherever possible. As far as where to bank, because I get this question a lot as well, wherever possible, bank with a bank that pays you interest to hold your money. Okay. A lot of people will bank at business checking accounts or banks that would charge you a fee to have like a checking account or a savings account or something along those lines. And so you're paying a fee every month in order to bank with this bank, who is then able to use your money, and they're not saving, everybody's money isn't sitting at that bank, right? They're using that money for other things. Have them pay you instead. So I just Googled, best interest bearing business checking accounts. And this is not a specific recommendation for any of these. This just gives you an idea. Bluevine pays you interest on balances. Grasshopper Bank apparently pays you interest on balances. Amex looks like it has a fee-free business checking account that pays interest. There are banks that pay interest. I know Bluevine, you can sign up online. And they'll pay you interest. I don't know if it's 3.5% anymore, but there are business checking account solutions that will pay you interest for you to bank with them, which means that you're getting paid to bank with that bank instead of paying that bank to put your money in there and for them to use your money and invest it. So it just helps to have a little bit of interest income to just kind of at least you're making something rather than paying a bank. I have some clients that make an awful lot of money. There is a QuickBooks checking account that is interest bearing, and I've seen that a lot. I have some clients that use it and love it. One thing I would just caution you about is it's sometimes a process to pull money out of that account. It sometimes takes a little bit, and so it's not an automatic access to that cash. So that's one thing to just be aware of if you decide to go with QuickBooks. But there are plenty of checking accounts that are interest bearing. There's no reason to not have a business checking account that is separate from your personal. One other thing to keep in mind is obviously I'm talking about the tax implications of having your own account, but I'm not discussing the legal implications. There's potentially legal implications that you would have to talk to an attorney to understand, but there's potentially legal implications for combining your business and your personal as well. So keep that in mind when you're making the decision on whether or not you're going to get a business checking account. Hopefully that was helpful. I will see you guys next time for day 5 of 90 days to taxes. If you have any questions, let me know. And if you did find this video helpful, I would appreciate it if you liked and subscribed.